Welcome to our special report, Markets in Turmoil.
A huge sell-off on worries about Europe's debt and jobs here in the United States. Neil, stay with us. He's going to join the panel here along with Tom Belesis, CEO of John Thomas Financial, Scott Martin, Tobin Smith, Mike Norman, and Liz McDonald. Mike Norman, I'll let you get first shot here at all of the developments today and how disconcerting or unworried you are about this.
Well, I am worried, and look, I've been talking about this for a while now, and I don't think it's very difficult to understand because what we're seeing now, this movement, this trend towards austerity, spending reduction, all these things are incredibly deflationary, not just in Europe, clearly, but we're talking about the same sort of thing right here in the United States with spending freezes. So what you're seeing is a reaction now in the stock market, and I wouldn't put too much hope in the rosy economic data that we've seen up until now, because this stock market sell-off can chill confidence very, very rapidly. Look, for a long-term investor, this is going to equate to a major opportunity. But I still think it's too early because a lot of these countries are just getting started in these cutbacks, and that's going to depress demand and cause unemployment to go back up.
All right. Well, Tom, we got to give a shout-out to our brother Mike here, who I guess was Monday you were saying sell the stocks because this is coming. But as you look at a downturn like we saw today, how much further before there come to be some real bargains available?
I mean, I think at this point, I mean, let's look at today's initial jobless claims. I mean, that was a real shock. I mean, we think the economy's improving here, and all of a sudden we come out with this number. So it just adds to the forced liquidations with what's going on in Europe. So we don't know where the downside could be, but like Mike is saying, I do agree, at a point in time, it's going to be a great buying opportunity, without a question.
Tom, why would you give less credence, or more credence, rather, to the number today? And would you feel the same way if we got what we got just a couple of weeks ago, which was the non-farm payroll growth of about 152,000?
You know, I do agree, Liz, but right now all the negative news is in the spotlight. You know, we have mid-quarter updates coming out in a few weeks, which hopefully will shed some positivity. But right now, everyone is looking at the negativity out in Europe. The future of the euro and the EU are in question. So how are we now going to say there's positive going on with so much negative out there? It's just not happening. People don't see it.
But, Tom, you could turn that around, couldn't you? You could say their ills are our gains. I mean, if Europe looks like a disaster, and I know they've been ringleading this sell-off here, then you could argue, well, in comparison, we look great. Now, we're hardly a poster child for, you know, fiscal austerity and being keen on this stuff, but by comparison, we look positively Buffett, right?
No, I do agree. Well, I do agree.
But, Scott Martin, at some point, there are going to be some bargains there. I was just looking at Intel, by the way. Intel is close to the $20 point for one share of the stock. That is a pretty tasty morsel there to pick up.
You're making me hungry, David. Intel ain't bad. You know, Apple probably in this sell-off is going to go down to $225, $230. That's fair. GE could head down towards 15. I agree. But, you know, David, it's again, you know, looking at the market, you have to understand psychology, and Mike kind of touched on it with what's going on. I don't think you buy anything here until you see the market hold those lows from February, if it can. And if it can't, which is 1041 on the S&P, and if it can't, you're going to get those tasty morsels again at a cheaper price, which makes them even better for you.
Tobin, you're never going to own either the top or the bottom of the market. Doesn't this look cheap, at least for now, and time to get in on some names, not everything, but if you've got that cash sitting on the sideline, instead of looking back and saying, coulda, woulda, shoulda?
Yeah, I would over the next 30, 60 days, remember, you always want to be the buyer on a day like today. You never want to be a seller on a day like today. So that's lesson number one. Number two, you know, the way we measure fear in the market is called the volatility index. Clearly, in February, when it was, you know, at a 15 handle, which is very low, we were, you know, the market was not pricing volatility correctly. Take it out today. Today we're almost at 50. Anytime you're over 40 on that index, if you look how options are priced, people are pricing in 8,000 on the Dow based on how it closed today. That means we got a lot of fear. That's when you want to be a buyer, when there's that much fear.
Well, you got to be a little careful there, Tobin, because, of course, with the 87 experience and in 89 when they had a little crashette with a failed leverage buyout of UAL, we had days of a sell-off here. And you're right. I mean, we bounced back in both occasions. But timing it is tough. But I do think, to the greater point, you always very leery saying this time it's different because, in general, it really isn't.
Yeah, well, then don't.
But
it isn't.
I will argue what distinguishes this. how fast things can happen and how quickly. I mean, it was just a few weeks ago we were reaching these highs, and everyone was convinced the market was going to be climbing this wall of worry. I don't know what's more accurate than what was going on when we were reaching these highs just a few weeks ago, or this downdraft today, or what was going on May 6th when we slid 1,000 points for quite other reasons, but all fueled by the same general fear. What I'm saying is that in this heightened environment where everything can move quite fast and technologically pushed over the edge, a lot of reason and rationale goes right out the computer.
Lizzie?
You know, I'm going to quote Gertrude Stein. You know, everybody gets everybody gets so much information all day long, they lose their common sense. We're seeing 4 bubbles blowing up, now a government bubble, and basically the failure of a small socialist welfare state in Europe, Greece, and it has a productivity output of Lithuania or Croatia. And so what we're seeing is what was weighing on the markets today was the leading economic indicators reporting negatively for the rest of the year. I'm looking through those numbers, x-raying them. I'm seeing declining building permits. So what? Stop building. I'm seeing lower and slower money supply growth. So what? That's great. That's a great thing. And the balance sheets are strong. The free cash flow has been coming in strong.
And that's exactly what Gertrude Stein said. Declining building permits. Who cares?
Try to rhyme that. All right, let's go up to Robert Gray in the newsroom for today's top headline.